Good morning. My name is Scott Rudler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we do have mixed markets around the world this morning as Europe gives back a third of yesterday's gains. Asia is mostly positive, led by the Nikkei, and our futures basically flat ahead of day one of the Fed's two-day meeting, which of course is the big headline, Scott. So how do you think we're set up heading into the meeting?
I think we're set up pretty well. As far as the world markets, the theme in December has just been mixed markets, divergences. One market up, another market down. In our market, it's the same type of thing. One sector up, one sector down, one stock on the move, the other resting. And that's just basically what's been going on, especially the last 2 weeks. If you want to talk about where our market stands heading into the Fed, yesterday we had a rally off of support. Didn't have a lot of power, but I guess why would anyone make some big bets if all of a sudden everyone doesn't have exactly the certainty of what the Fed will do because they've surprised in the past.
Right.
And I don't think they're going to surprise this time, but there's still some thoughts that maybe they do a $10 billion taper in December or at least strong language for January thereafter.
Right. We don't know until we know. So all we can do really is go by the chart where the levels and what we need to be watching.
So if you look at the chart of the S&P, which is the roadmap that we typically use, you will see once it comes back up that you do have a low here in November, and this has been the macro trend, which we're not even close to. But if you're a professional trader like myself, trading for P&L or for Alpha, this trend line is something you probably watched and navigated. That was important to you just in case we were going to get a bigger pullback that we've seen. Some guys even took off some risk when we broke the 8-day right here around 1800, or this was like just say 1796. We did hit a low here of 1772, stabilized for 2 days, and then yesterday we bounced off of it. Still above the 50, still above the macro trend. All in all, things look like it's pretty much a lot of the same. We are halfway into this area. I would say if the bears want to maintain some type of control here or hopes of lower prices, they probably don't want to see the bulls reclaim or at least take out yesterday's high of 1792, probably all the way up to about 1801. I don't expect that to be today. We'll see what happens tomorrow. All in all, you do have somewhat of a channel building here where this is the high and the low end, and let's see if what happens in this halfway mark, which could be a little bit of a rubber match.
Well, on Fed Day, one area to watch could be gold. We could see some movement there depending on what the Fed says. What are you watching there?
I'm probably not going to trade it. It's hovering, getting tight again, which is good because then you can at least see which way it resolves. It's been in a huge downtrend for the majority of 2013. Every time everyone wants to say it's back, it's only a bounce and it could be shorted. You look here now of the GLDs, you will see, here is the low from earlier in this year. We're hovering right above it. You have, a small trend line right here. So I would say if it wanted to rally and got above 122, maybe you could see it move to 126. But overall, if this gets taken out around 117, this is your point of reference. You look at the trend in gold, and it's just been to the downside with multiple areas to make big time adjustments. And this was right here, the macro standpoint, which we talked about many times. Once it broke this 150, there was really no reason to be in it.
Well, speaking of getting tight, we're also seeing the TBTs get nice and tight. Are you expecting potentially another leg higher after the Fed releases a statement on Wednesday?
Well, it's either going to be Wednesday or I do think in 2014. In my opinion, I think the 10-year gets to at least 3.5 next year, maybe higher. You look at the chart of the TBTs, you will see, even though it had a big move already this year, look where these things came from. So with that being said, you have really big resistance coming across right in this zone, which is where it pretty much stopped. So with that being said, you take a closer look and you will see it's getting nice and tight again. Right? If you look at the TBTs, you will see this was when it peaked out in August. Here is the last move lower. What did it do? It held the prior breakout coming into this zone right here, and now it's getting tight. So if the Fed does taper on December or Wednesday and they say it, you're going to see a move blast off through 80, maybe even get back to highs on Wednesday. If they don't taper, but have very strong language, maybe it's a little bit slower and it goes. If they say something like the September surprise, then we could probably resolve to this way. But ultimately, I do think these levels get taken out in 2014. So if you want to throw some in the draw and not be involved in the volatility of trading it, I think it's a decent idea.
Well, let's turn the spotlight to the casinos, which continue to provide opportunities. MGM had another 2013 high, which I know, Scott, must have made you happy because you've called this one for the drawer for a while.
Yes, because it doesn't always have huge moves, so I'm like, I like this stock, put it in the drawer. It could benefit you. In 2012, we started talking about it. Now it's 2 years later, it's a lot higher. You look at the chart. On the daily chart, it looks as if it's had a tremendous move, which it has, and it's now at 2013 highs. But if you go to the weekly chart, you will see it looks like it's just getting going. And at some reason, or at some point next year, there's no reason why this thing perhaps can't be closer to 30 bucks, right? This thing was as high as 90 at some point, and this is major resistance. So at this point, if you have it in the drawer, I still think you can keep it there. And perhaps at some point next year, 28 to 32 could happen.
How about Las Vegas Sands? Because this one's been hovering at highs and holding above its 8-day, so it's been showing some real relative strength.
Yes, and if you look at this, look at the chart. We've liked this for trading it also from a bullish stance. You look here, you'll see that this just popped out of a pretty big channel. You go like this. This is on the weekly chart sideways. What a big consolidation. Look at the size of this consolidation. After the move that we saw from 2009 all the way up to this peak, and now it's going again. In my opinion, you look at the resistance here, more on the weekly chart, and it seems like it can get to almost 90. You go back to the daily chart where you can navigate. I don't know if it's today, but it's trying to build another level above the 8-day, and if this were to get above 77.91, perhaps you get some extra cash flow.
And how about Wynn? Because Wynn did put in a new high after a few days of rest, but then it pulled all the way into close at its lows. So what do you think about Wynn?
Well, Wynn has come a long way, and I just think it's extended. If the casinos are going to go, this could stay in the game. So I would look at it and just give it some time. You look at Wynn here, you'll see this was the time to get involved when it broke above this descending little trend line here. And then again, when it took out the prior 2013 high. So up here, yes, short term, that could be a little bit faulty. It could come back in and retest the 8-day. So, or if it just hangs out now above the low from yesterday with some time, it can go again. But ultimately, this has been a great stock. Since we're looking at weekly charts, let's look at the weekly chart here. Obviously, this one, is already above the prior peak from 2011. So this is, looking real good. Let's go to the monthly real quickly. How does that look there? Look at this. Monthly, you want to look for relative strength on a monthly chart. This is already back at, historic highs almost, whereas the monthly chart on MGM, not saying it's going to do the same thing. Look where this is, compared to where it went. So, why not 28 to 32 next year?
All right, well, coming up, we're going to go in the trenches with solar stocks. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF. I'm Mark Sperling, Director of...
We're back and going in the trenches with the solar stocks, which have been a nice surprise in 2013. Scott, do you think this group can get going again?
This stock, or this group, was a nice surprise for 2013. They took off and they had follow through. They weren't just dead cat bounces, because in the beginning of the year, everyone's like, oh yeah, well, you know what, they've been beaten down and so abused that it's just like a January effect. And it turned into a lot more than that. So with that being said, over the last month and a half, they've pulled in, they've consolidated. So the question is, can they go again? At this point, it looks like they're trying. You look at CSIQ, the first one right here. You will see that this, after a really nice move through the fall, has corrected from November into this month. Perked up a little bit yesterday. I'd love to see some continuation. For continuation to happen, it's going to have to get above 29.26 and stay above 29.26.
Tesoro had a, TSO had a nice bounce type move action yesterday as well. Got back above its short-term moving averages and registered a 3.7% gain. So this one perked up as well. Yeah, and this one has another level there. So this is a nice setup. So if the solars want to go, this is, in my opinion, in the cards or in the game, and the sun could shine here. With that said, this was your move yesterday. Here's prior resistance. So this can get going above,
yesterday's high first, and then this, what is this, 59.50 is going to be a pretty big level above that, and there's really not much in the way until the old highs here from earlier this year.
How about SPWR? Looks like it's retesting the 100-day EMA. Do you think this is a level where it could get some attention?
This one's been beaten up a little bit more, and the pattern is not as tight, but if you want to look at it versus support, here you go, SPWR. Right there, you could trade versus 27.15, and I guess if the group gets a little bit of attention, it could trade above this pivot and try and see some bigger resistance closer to 31. This one doesn't look as good as the last two.
Well, if this group does get attention, then could we see Solar City get back in motion, because this one's been hovering around the 8 and 21 day?
Yeah, and this one's been moving well, and Elon Musk always has a little extra flair.
Yeah.
So with that being said, we like to turn here, and if you look here, it's getting tight again. It had a little red dog reversal here on this day, which was what, 12.12, holding in there. If this starts to get above just a 52.50-ish, it could start going again, but you're going to need some power, you're going to need some commitment to it. This was an unbelievable move. Since then, it's been pretty choppy, but it's getting tight. Whenever it gets tight, you put attention there, and maybe you want to focus or put a buy stop somewhere around 52.50.
Okay, time for some quick hits. Let's talk Apple, which had a small bounce after a 3-day pullback, but gave back most of its intraday gains yesterday to close on its lows. Scott, what do we do with Apple right now? Are you bored by this action? Are you stepping away?
I tried yesterday and I lost money. I'm not going to be that interested until it gets back above 560 with some kind of volume and authority.
Okay, I'm not showing the levels. How about Tesla? We just talked to Elon Musk. How about Tesla had held most of its gains from Thursday's breakout last week?
Yeah, this one I'll show the chart because you want to see what's going on here, and what's going on here is pretty good. Okay, here was a move where it broke this little downtrend, then it wound up going again. Here's that red dog reversal around 136, and it's holding in there. Another day or so of holding in there, and perhaps there'll be enough digestion to take out this moving average and get on its way closer to 156.
How about Groupon? It got back above the 8 and 21 day last week, and then has been flagging nicely above the 8 days since.
This one I went with, it had a nice day one, and then I got away from, and now it's consolidated again. You look here, and it looks like it could have some continuation. This was that day one, gave you a 3-day move, little sideways action. So at this point, it's showing some commitment to that area. So I would say if you long some, be long some above 1060, perhaps it gets north of 11.
Well, not every day can be a fabulous day for Twitter. Apparently, Red Dog Reversal retraced 4% yesterday. Are you expecting more downside action than today?
It might just have an inside day before perhaps getting a little bit more downside. I know yesterday it did give us that red dog reversal, I think at 59.40, went as low as like 56.40, so $3 for a day trade. So hopefully if you look at this chart and you took that trade and you saw it trade above 59.41, put a high in at 60.24, you shorted versus that, and then on the close covered some. And now see what happens as far as the daily action. If it were to stay below 58 for the next session or so, I think there would be a little bit more higher probability that we take out yesterday's low for some continuation down to retest the 8-day. If we just go sideways up here, then I would say just be on the lookout that it can continue, because I do think Twitter continues in 2014. I just hope that we get a little bit of a push down to this first. I do have some leftover short here.
All right, and over in the banks, Goldman had its first close above 170. Does that strength continue, you think?
It'd be nice. We had so many false starts and so many back and forths around this 170. It's the first time it closed above it. Going into the Fed, sometimes the banks do become a center of attention, so I'd love to see them push this one. I'm long a little bit of this, and perhaps I might even add, if it starts to really take out this area, which if you want to take a look at here, look at this, resistance wall. Here it's nice and strong, closed okay, better than some banks yesterday. I'd love to see it take this out. If it takes this out, maybe finally Goldman can get some momentum up to 175, 180, maybe even before the end of the year if the banks want to rally a little bit.
All right, well, as we get ready to begin the trading session and day one of the Fed's meeting, what will you be focusing on today?
I'm just going to try and remain tactical. I don't think the market's going to run away from us today or fall apart, probably an inside day. So it's going to be really where is the action, and typically you have to look around and see what's showing relative strength weakness. We talked about a lot of the things that could happen today. At this point, I wouldn't push it today. The action is always a little random the day before, even the day of Fed day. What we do know is support 1772. We know where yesterday's gap up started around 1784. We know yesterday's high at 1792. And then we know where 1801 is, which is probably right around that line in the sand where the bears or sellers have to defend in order to keep some of this move contained. And if not, we could be seeing 1813 or higher, come New Year's.
And with that said, happy trading, everyone. Have a great Tuesday.